Good morning, ladies and gentlemen, and welcome to the show on this Monday, July 25th, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, I'll tell you, guys, I'm going to get right in there and I'm going to start the charts today. And at the end of the show, at the very end, I'm going to include some pet pictures today. We got 3 pets to preview today that I know you guys pet pose them waiting a while. And I had to restructure the channel. It took a little bit longer than expected, but we're getting to it today. We're getting started on it, so it's going to be a nice show. So without further ado, let's get the charts started. Let me see. Let's start the charts right here. It says delusional Biden administration front runs recessionary GDP print by redefining what a recession is. It's not a recession until the White House gives the economists on its payroll permission to declare that it's a recession. Well, the traditional standard of a recession is 2 quarters of negative GDP print, negative growth GDP. That's traditionally. They can dance around this thing all they want, but that's the traditional recession, which I think we're actually already in a recession, but this thing could turn into something more nasty, in my opinion, than a recession. Very quickly turn into something more nasty. They can't normalize interest rates, get to normalize right now. To normalize interest rates, they'd have to have a U.S. 10-year probably up around 8 or 10% or something like that, because the rate of inflation is so high. To have a normalized rate so that they can improve on inflation, like Paul Volcker did during the Volcker era. They can't do anything like that. Peter Schiff is saying it's getting harder to deny the recession reality, the reality that we're in a recession right now, because of about the weakness in the economy. This one story got me this morning right here. A flood of repossessed vehicles is poised to hit the used car market. What are they going to do with them all? When things were going good and we had economic stimulus coming into the economy, at the same time people were like COVID lockdowns and everything else, there was a tremendous amount of vehicles being sold and stuff. They were trying to get them. I mean, it was and people were buying new cars and stuff, and these high rates of long-term plans. Like they buy it for like 7 years of payments, 10 years even of payments, And then what happens is hard times hit. No more stimmy checks to come in to help them pay their bills. No more unemployment checks coming in or whatever, and then their cars have to go back. And that's what's happening. It's hitting right now into the used car market. The used cars are pouring back in. What's the next thing that happened? They get all these repossessed vehicles, and then the price starts to drop on used cars. It says right here, now is the worst time ever to buy a car. Okay, oh my goodness, entire North Carolina Police Department resigns in protest over a progressive town manager. It's not a recession, but flames. Anyway, let's get in there and take a look at the markets today. What we got the silver price dropping today. It's down 20 cents. Now, I'm going to tell you guys, I think that we are now, at this point, down to mining production cost, and I think we're going to start to see mines shutting down production on some places, like depending on the mine. You see, not all mines have the same cost of production. Some mines are cheaper and some mines are a little bit higher. But we've seen cost of the energy to get the silver out of the ground go way up in the past year because of the cost of fuel going up. Gasoline prices went up. Diesel fuel prices went up. And so this affects the net bottom line of how much it costs to get that ounce of ore refined into an ounce of silver, to get the ore refined. And so 1836 is cutting it awfully tight for an awful lot of mines. So I imagine some of them are probably a little bit over that even. And so we're down 21 cents just on the day so far. Silver and gold have taken an awful blunt beating the last little while. And it just reminds me of what happened during the 2008 crisis, where we had silver and gold get beating, and then on the other side of it, we had silver pop all the way up to $50. Well, what would $50 silver look like in today's, with the amount of inflation that we have today? Maybe $100 silver. So it'd be the same deal, you know. And this emergency that's setting up now, China's kind of leading us into it right now. And things are rolling over in China really bad, especially in the real estate market. That's an $8 trillion market, the Chinese real estate market. We got the Fed out there, hell bent for leather, ready to raise rates again. You know, but they're gonna start to pivot pretty soon, and the market, I think, is sensing them pivoting. Okay, let's get a look at gold today, right? Where's my thing to switch to gold here? There's nothing there to switch over to gold. Well, anyway. I don't see my thing here to switch over to gold. Switch over to the price. It says silver, 60 days silver, historical charts. Okay, let's go over and take a look at crypto. I'm not going to spend there all day looking for the button to switch over to gold. 1,006 billion. That's just over 1 trillion. So we're back up above $1 trillion in market cap for cryptocurrency. And we're looking at a Bitcoin price of 21,830. Well, congrats to Bitcoin for stabilizing above $20,000. This has been an awful big rout. And actually, Bitcoin has reached the point where it's, I would say, capitulation. And I know that's just me saying that, you know. But I mean, when it went underneath $20,000, you know, I mean, it was just like, compared to the price it had been, like 68,000, went all the way down to, what was it, 18, 19,000, like that, something like that, and now it's bounced back some, so it's stabilizing a little bit. But then the markets are stabilizing. We have to say, well, why? Let's take a look at the Dow today. It's down nothing. It's just basically on the board. This is stabilized as well. You know, I mean, it was almost going down below 30,000 there. Very close. So markets have stabilized, 31,800. So it's went back up a little bit. But why? Why is, you can find it in the bond market. They've been messing around. I know there's big talk about how they're going to cut and raise interest rates and quantitative tightening and all this kind of stuff. But on the other side of that coin, they're in the bond market fooling around doing something with the long end of the yield curve. And I'm suspecting money injection, and I'm suspecting that that's what stopped the collapse in these markets and cut it short. But it didn't really change the perspective. It didn't swing it back into a bull market again. We're still in a bear. And of course, let's take a look at oil today. 95.88 today for oil. It's up 1.18%. Let's take a look at the MOVE index today. 123.70. So we see that instability that come a little while ago. And now the instability's become more, markets are more stable again. I was really worried that we were going to have a insolvency crisis within the markets, a deleveraging event there a few weeks ago. Seem to have, since they've messed in the bond market, they've injected some sort of liquidity injections. I call it yield curve control on the long end of the yield curve. I think that's what they're doing. They've stabilized things again for now. Things could get pretty hairy pretty fast again, though, you know. Looking at the bond market today, the U.S. 10-year at 2.8 and the U.S. 30-year at 3% today. Let's take a look at the dollar index at 106.45. So this is really what it's all about. They're trying to squeeze as long as they can. The BRICS are over there, the BRIC nations. We got Russia, China, India, Pakistan, you know, all the BRICS nations. Is Pakistan one? Anyway, all the BRICS nations over there, including Iran. Iraq. Iran. Anyway, the BRICS nations. You know what I'm talking about. They are hell-bent for leather to try to destroy the petrodollar now at this point. Russia's 60% of their trade in dollars over the past couple of years has been gone. You know, they're not trading in dollars anymore. China, and they're forming these pacts over there, and they're starting to think about backing their currencies with gold and silver, you know. And the Russians, you know, they were planning on, they talked about backing, I don't know, did they back the ruble with gold? I think they did, but are they still? I'm not sure, exactly sure. But we see which way this can all turn very quickly, to a point where the eastern side of the world is backing their currencies with gold and trading amongst themselves with their own currencies and stuff that have some value, and the western side of the world over here, what do we got to back our currencies with? We're just going to continue on with this slide downhill in what our currencies can purchase, and ultimately nobody's going to want them. All of our currencies are kind of linked in together to this package that revolves around the dollar index, and they're all garbage. You know, I could name them all: Swiss franc, Canadian dollar, the euro makes up the biggest part of the DXY. It's all garbage, and it's all being inflated away, and that's why it's garbage. It's only garbage for one reason, and that's because they just print too many of them. They print as many as they want, and anytime they get in trouble, anytime a bank gets in trouble or whatever, they bail it out. They got all these zombie corporations going and everything else. Not to say that the East hasn't had their share of doing this same kind of stuff. But what they were doing for years there, the East was smart enough to say, hey, to the West, hey, you guys are going to lease your gold into the market. You're going to rehypothecate your gold into the market. You're going to sell your gold you have in the Queen's vaults or whatever into the market. We'll buy it. Ship it to us. We'll resmelt it into 1 kilogram bars over here in the East, over here in China, or over here in Russia. We'll put it away in our vaults. And they've basically pretty much emptied the vaults in the West, or come close to it. I mean, the vaults is just because they did that for years. Shipping it east. The gold and silver, real physical gold and silver. And they knew at one point in the future that they were going to have to back what they got with real money. Sooner or later. They knew that. And they've been planning this for years. They've been setting up their own banking system that is a rival of the World Bank. And they're getting to the final end of their plan where they're just going to go snap one day, and our dollars are all going to come back home to roost on us, and we're going to see massive amounts of inflation like we've never seen before. You can bet on it. And so we went through this little period where the Fed says, okay, we're going to tighten. And we're going to make the dollar worth something. So we've seen the dollar index go up. It's up to 106 or more because of the Fed's action of being tight. But that can only last so long without destroying the economy. It's almost like a dieter saying, okay, I'm never going to eat again. You know, and I mean, how long is that going to last? A week? You know, and then the first thing you know, they're right back piling into the food again. But, you know, here's the thing: if it was a manageable diet, kind of like if you go over to China, what they're managing, if you look at it like a diet, they're managing what they've got with gold and silver. We're not. We're just like the dieter says, I'm never going to eat again. Whereas over there in the East, they're like the dieter who says, hey, you know what? I'm going to eat again, but I'm going to follow a very strict diet plan, and I'm going to plan things out, and I'm going to eat the right kind of foods, rather than never eating again. I'm going to eat like uh, lean meats and vegetables and fruits and stuff, and they'll see success. Whereas over here, we've let all of our gold go, so we're not going to see success. Big talk, about what we got in Fort Knox, which is probably never had an audit. Since when, Anyway, listen, thanks for listening, guys, and we'll catch you guys in the very next show. Oh, and now for the pets. Hello, ladies and gentlemen. Welcome to the pets today. We're going to take a look. First pet picture we're going to take a look at. Let's turn the charts on right here. And this is a guinea pig, and his name is Loaf. I'm going to tell you, guinea pigs are just about the size of a loaf of bread. I don't know why they name Loaf, but I think that's a cute name, a really cute name. Yeah, I mean, you can fit them in a bread pan, and they would fit in there just perfect for a little, like can you imagine a person if they did have a guinea pig for a pet, and they had a little bread pan and turned it into a little bed, like just a little bassinet bed. They could put a little. Anyway, I'm just talking, but that would be kind of cute, for YouTube video or something. A little bed made out of a bread pan for a guinea pig. Imagine it. Anyway, let's move on here and let's take a look at the next one. Where's my list? I had it here. Here we go. Okay. That was Loaf. The next image is of Rusty the Spaniel. Here's Rusty. Let me see if I can enlarge him a little bit. That's a bored boy. He's very comfortable right there in that chair. Absolutely comfortable. But he's like, what's next? Where we go? We going to go to the park? Going to the park yet? Time to eat yet? What time is it? I just woke up from my nap. I'm ready to go, but I'm bored right now. But I'm ready, ready for action. Okay, let's take a look at the next one. Here, I think this is another one of Rusty. We'll go in a little bit and take a closer look. Well, it looks like he's out at the park or whatever. It looks to me like it's a hot day. And that's how dogs cool off. When it's hot out, what they do is they open their mouth, and that cools the body temperature down rather quickly, because they're all covered with fur and everything, and it's hard for the rest of their body to cool down. There's two places they like to cool down. One, if the floor is cool or something, they like to get their belly on the floor because there's not much hair on their belly, and that can cool them down. And then they use their tongue, and they open their mouth, and that cools them down a lot too on a hot day in the summertime. Okay, our next picture here is I don't think we got a name for these pets here, but they're really cute. We didn't get a name for them. They come from Chris, and he sent some pictures of his pets, and they're really a couple really cute pets. Let's open it up and take a look in there closer. Awful. They look like huskies, and they got awfully cute blue eyes, and awful nice fur. Look like very healthy dogs. Smart too. You know, Huskies are one of the smarter breeds out there. They can really figure things out good. They have good skills at figuring out their environment and stuff. You know, Huskies are oftentimes a dog that'll figure. You put them in the cage and they'll figure out how to open the cage out by themselves. So you come in and whatever it is, you know, maybe you had your dinner on the table. You know, you put the dog over there and locked him in his kennel cab. You come back in, your food's missing. He's back in his cage all looking innocent and everything else, you know. You just know something's up. How did you get out of that cage? The Husky's one of the breeds that can figure stuff like that out. Anyway, listen. Thank you guys for listening to the show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.